Joining us live now in the studio is John Kehoe from the Australian Financial Review. John, thank you for your time.
Morning, Annalise.
Now, this decision in the US by the Feds to cut their interest rates again, it's going to have huge ramifications for us.
Yeah, it's a really aggressive move by the US Federal Reserve, not only slashing their cash rate by 1 percentage point to virtually zero, but also committing to buy $700 billion worth of new bonds as well. So resuming a more aggressive quantitative easing and a few other little measures as well, just to encourage bank lending and this sort of stuff. So I think it's really setting a precedent now for all central banks around the world. We saw the Reserve Bank of New Zealand aggressively cut interest rates and signal that they're prepared to do quantitative easing, and I think it's only a matter of the time. Market economists are saying, as we're reporting on AFR.com now, that basically the RBA is going to be going down this route soon, and probably before its meeting scheduled in 3 weeks. A lot of people now expecting them to call some sort of meeting before that scheduled meeting.
Now, it is just kind of unprecedented how quickly we're seeing the situation change, how much we're waiting for health authorities to tell us what we're doing. So when it comes to those quantitative easing measures, do you think with the best that we know, they'll be like in the next week, 2 weeks, or is it just in the never at the moment?
I think it's a bit of a guess. Yeah, the timing of it is up in the air. But also we've seen the RBA just reported this too, that they've stepped into the so-called repo market this morning in financial markets. Now, this is part of its daily financial operations where it provides short-term liquidity loans to banks. Now, they've really ramped that up and they're going to do it for longer, and the banks are sort of gobbling up that. The banks are well funded long-term, they're okay, but this short-term liquidity demand, because of the volatility we're seeing in the US Treasury and credit markets, is really getting investors spooked at the moment. So the bank's just demanding a little bit of short-term, more cash from the RBA. They swap collateral for that, but it's interesting to see those developments too. And
we're seeing some relaxation from the Council of Financial Regulators?
Yeah, so they've signalled APRA, ASIC, the RBA, that they may be prepared to ease sort of some regulations on the banks, just to help them through this troubling period so that they can help their customers through. Now, they haven't laid out what that might be, but it might be bank capital or other lending restrictions as well, or requirements such as the responsible lending laws. We've seen similar moves by the Bank of England, the Reserve Bank of New Zealand in the last couple of days, just easing up on the application of some of those laws or bank capital. And certainly the APRA and the RBA and ASIC signalling this morning they're considering similar kinds of things, but the detail yet to be sort of laid out.
So what do you think the pressure points are going to be for the government now? The stimulus package is coming in. It was much bigger than we've all expected, but given the way things are going, it's probably pretty bang on the money, the amount. But what do you think is going to be their pressure points?
I think it's probably inevitable that unemployment is going to go up quite a bit, and I think that's going to be the real test for them. I don't know whether they can stop that, to be honest. I think we're going to probably see a fairly significant rise in the jobless rate. I don't want to be alarmist about it, but hearing a lot of anecdotal stories from small business, events people, contractors, that they're already having work cancelled, laid off. Just had a friend who's an auditor contact me saying he's already seeing SMEs closing down and stuff. I think it's really concerning for the jobs market, the impact on this. And I think all the government can do is probably beef up the package that it's announced so far, but it can't stop this. This thing's coming like a freight train to the economy, I think, and it's going to hit really hard.
Because the big concern we've heard from the government from the get-go is got to protect the supply chains, got to protect the supply chains. But when you're right, if we're cancelling all events over 500 people, the government was criticised for not just doing it immediately, for waiting 2 days, but these businesses have a lot of things they have to build in. I mean, that's a lot of people who might not have a job now.
Yeah, like the supply chains might open up a little bit better from China as China comes back on board, but this is a global problem now, and you're going to probably see it hit demand, consumer demand, business demand across the economy. So the second and third round effects, I think, could be quite substantial.
And tourism as well, that's the other big one. When we've got this basic travel ban stopping people going overseas, we're not going to be able to compensate the numbers with domestic tourism for what we have going out.
No, I mean, the one saving grace will be the Australian dollar's lower, so it'll encourage people to holiday here. But are people going to go on holiday? Probably not. They're probably going to go and stay in their home rather than going away. I know I'm meant to go away in a few weeks' time, and now contemplating whether that's going to be a good move.
Because you don't know where you're going to get self-isolated if you do become exposed to something. So this is a real test for the government. What do you think of, in particular, the public information? We haven't really seen this advertising campaign that was promised. I'm told there's a few ads. I haven't seen them. I don't know where they're supposed to be. And the messaging really is becoming an issue.
Yeah, look, I take Scott Morrison's point that I think he doesn't want to be alarmist and panic people more, so he's trying to be calm about this. But my colleague Phil Curry has made this point, and I think it's a good one. There has been a lack of communication around this about what we should be doing. I think a really clear, simple message from the government should be, look, for most of you, it's going to be the coronavirus, health-wise, is not going to really have a huge impact. But the reason why we're trying to contain the spread of it is to take pressure off the healthcare system, because it is going to hit a lot of people across the country. Therefore, take pressure off the healthcare system to help the old and vulnerable people who this could kill, basically. And I just think a really simple message like that would help people understand a little bit better. And I think it's starting to seep through now that people understand they've got sort of a national patriotic duty, basically not to go out as much, basically to self-isolate, not necessarily so they don't get it, but so they get it later and then they don't pass it on to someone older or vulnerable.
And I guess that's just the key issue here, is just communicating that to people without putting in the wrong message. And what it seems to be happening is that everyone's so afraid of doing the wrong thing, they're not doing anything, and then that in itself becomes the wrong thing.
Yes, and for a lot of sectors of the economy, that's going to be tricky, isn't it? I mean, we'll probably see the Amazon-type businesses, if they can have their supply chain, and the Netflix of the world, and these purchases online. We went and bought a laptop yesterday for my oldest daughter, because she's probably going to be at home in the next few weeks, won't be able to study at school. So we thought, well, she'll need one at home to study with now, you know. So there'll probably be some upsides for certain businesses or certain products, but you have to say overall it's going to be a negative.
Absolutely. John Kehoe, thank you for your time.
Thanks, Annalise.